What's up, everybody? Zach is back with another episode of Journey to $1 Million. And I mean, we're getting closer and closer, of course. We're back pretty much all the way from this tech dip and the transition into the cyclicals. Well, I guess we transitioned back out of it. I don't know what's going on. Don't ask me. I have no idea. But anyways, yeah, yesterday was all right. It was another flat day, which I take as a really good sign. And I was only up 0.45% yesterday, which I think was only around a few $1,000s. And so yeah, it wasn't anything big, but I take that as a great sign that the market is healthy and it's not going to continue falling down. I mean, it's been pretty good for a while now. So I mean, I think everything is going in the upwards direction. The U.S. economy is looking great. Overall, I'm not worried about much of anything so far right now about my portfolio. I think it's looking pretty good. I added a lot of nice positions, and I would like to take a minute to reflect on what just happened and what we can learn, what we should do about it. And I see some people that might be confused, or maybe I don't even really know. But yeah, so I made this report, but nevertheless, if you go to prostockedvice.com, you can see the latest blog post that I made. But it was, I mean, I'm up. I'll just go ahead and show it to you. I'm up like from 1 month. I'm up like almost $200,000, and of course that was obviously after a dip, and it came back up. So I'm pretty much all the way. I think maybe the highest would have been 740, and I think I'm at well, with including the pre-market today, I'm at about 720 something. But anyways, we'll see how it goes. Of course, things are up, things are down. There's going to be dips, and that's not the only dip we're going to have. So I mean, we might as well just reflect and try to take it in now that we're past it. And if whoever hung in there with me, I want to say thank you, congratulate you, and for all of you guys, which there's not that many of you, but for all of you that are smashing the like button every single video, I really appreciate you. So with that said, let me know who you are, because I appreciate that. But hey, go ahead and smash that like button again. Smash it a million times. Hopefully we can get to $1 million in a couple months. Anyways, let me just go ahead and start sharing some of my thoughts. Because once the dip started dipping, I don't know if you guys remember, but I had cut almost all of my option positions. Well, specifically the short term and mid term, I cut them all, and it hurt a little bit at the time. Of course, nobody likes taking losses, and especially for myself, I really don't like to lose money. And I'm so public, I'm so transparent. So it's not really a good feeling. So I can totally understand anybody that I'm right there with you. But nevertheless, I still did, because I saw what was going on. I saw, okay, tech is about to dip, which is not so surprising because it was just at all-time highs like a few days before, and it ran up so much since after COVID. So I wasn't all that like super worried or panicky, but I saw that tech was dipping. The economy was opening up. From the new administration, the Biden administration, pushing the economy to get more open, the vaccinations and everything like that. So there would be, and also the inflation and the stimulus. So I mean, there were good fundamentals that were showing a move out. I wouldn't even say it a move out, although that's how they framed it. The media framed it sometimes, like CNBC, but a move out of tech. But actually, it was just taking a profit of some of the tech, because I mean they were at all-time highs, and it made sense to do that, and then put them into some of the lagging behind, lackluster, old, worn-out Dow plays, or whatever you want to call it. But yeah, so I mean there was some sort of transition into the cyclicals, and then oil was booming there for a minute, although not so much anymore. But that's pretty normal. So yeah, I saw that happening. I was like, okay, well, this is going to possibly be a rocky ride. And of course, at that time, it was the last couple weeks in February, nobody know how rocky it's going to be. The 10 years started making the news. Yield started moving up closer to 2%. People were freaking out. And this was not a long time ago, guys. This was literally, people were still freaking out about the 10-year treasury literally like few days ago, it seems like. Not so much anymore because tech is back up and everybody's happy. I don't really know. But anyways, that's what we saw happening. Cut all the small positions, even though it hurt, and got ready for the roller coaster. Didn't know how it was going to be. Of course, I think it was all way overblown, out of proportion. Like, oh my God, sell all your awesome tech stocks that have revolutionized the last decade of our life and continue to make money despite anything, and buy Wells Fargo or buy Delta Airlines or buy all of these crappy companies that aren't making money. I mean, it was overblown a little bit, obviously, and that's my opinion. But that's what I did. I cut those, and then I took the money that I had cut those options positions with, which it wasn't all that much anyways, because I don't do like 70-80% of my portfolio in options anyways. Of course, I had some ARC leaps, and I had those Apple leaps, which I had just gotten into, and I didn't want to cut them. And it's also a FANG stock, so I didn't feel all that risky. It's Apple, and I still believe Apple's going to hit $180 sometimes this year. So we'll see about that. But nevertheless, I had took the money from those options that I cut, and I moved them into dollar cost averaging into my ARC leaps, buying some new ARC leaps, dollar cost averaging into my Apple leaps, and of course buying some new ETFs that I was interested in, like the Buzz, which I still like. Actually, that one's done the best during this dip. I think it's up 7-8%. Got the OGIG, got the SPACX, SPCX. I cut most of my SPACs because those are too volatile. But see, the point is, the short-term options are way too volatile. If the market is showing a clear direction up, so for sure we can do calls, short-terms, weeklies. It's still risky, but we can at least say it's less risky if we see it's moving up. And I think that's okay. And this is my style of trading. But if we are unsure and the VIX is going up, the volatility index, and if things are going down, we don't want to be in those calls, obviously. And of course, if things are trading sideways, we don't want to be in those either because of the decay. So that was the point. That was the thought process. And using the money to dollar cost average into your longer term positions that you're going to be in for 5 to 20 years anyways. Well, what's the problem? If you're going more into those, they're on a discount, so you might as well. But those would be the quote unquote safer plays. But nevertheless, that was the basic thought process, and that's what I always do for the dips. But yeah, I had my 15% reserves as well, and then I took the cash reserve, which actually I used the margin on my Webull for this, but I do have the cash to back it up. And I think I bought about $90,000 now in margin. Maybe it's a little bit more. I'm not sure. Not about $90,000 in margin I added into this while we were dipping. I need to go back and calculate every single order I executed, but something like that. So it was around, I added 90,000 in, so I'm feeling pretty good right now because I'm already back out of this hole, out of the dip. I've added to my long-term plays that I see myself keeping for 5 to 10 years, 5 to 20 years anyway. So what's the issue there? If I bought them cheaper, and most of them are already all the way back up anyways. And then I just added more to the positions. So I'm feeling pretty good, and I cut my short-term options. In a sideways market, it's not going to do good because of the decay. And those are not something that you can just hang on to. Like if you had a call from January or February before the dip, if you had a call in Gevo or Nano Dimensions or Palantir, and the expiration date was this September, well, you're thinking like, oh, it's going to be fine. It's September anyways. The market's going to be back to normal. I have plenty of time. Yeah, until September, everything will be back then. I make money. Well, yeah, it's possible. It's very possible. But see, the thing is, even though that's a midterm option, with the trading flat, every single day it's going to decay and decay and decay and decay. You think even if it goes up, your option contract might lose money. And if it goes down, it's obviously going to lose money. If it's flat, it's going to lose money. So, I mean, that's just too risky. So, I mean, some people don't agree with me on that, but I'm going to stick with it. That's always worked for me. And yeah, those are just not something, in my opinion, that you can just hold through dips. Even the leaps that I had, which were more than 12 months at the time, now they're not, but they were at the time. But nevertheless, that's just my opinion. So Yep. Let me know what you guys think if you have differing opinions. I just think that it's overall not a good idea. And that's what I had done. And so it might appear that I only am into ETFs right now, but that's not the case. I like a lot of other things beside ETFs. And if you guys have been with me last year, because there was a lot of you guys that came over around the GameStop time, I feel like the meme-ish time. But before that, I was doing the same thing. I was still on my journey. So if you guys were with me at that time, you'll know. But of course, a lot of the new people, who knows? You might have joined last week and you think like, oh, well, this guy only has ETFs. Well, you caught me at the wrong time. Guilty as charged. I mostly do right now because that's been the safest thing for me to do, but still make money with the leveraged ETFs, of course. I mean, make money to make it be worth it, I guess you could say. Instead of the boring old SPY, we spice it up a little bit with the SPXL. But that's something for a separate video. But anyways, I do appreciate you guys, of course. Like and subscribe while you're at it. Follow me on Twitter. I do the live trades on Twitter. But yeah, I just wanted to make this video because I see some people that, well, first of all, I wanted to reflect. What can we learn from it? What can we take away? Let's be better prepared because it's going to happen again. Like, that's for sure. It's probably going to happen in a couple of months. And maybe it's not going to be as bad. But it could be, and it could be worse. And you need to reflect on this right now. Maybe you came out ahead. Maybe you handled it better than I did. Maybe you got screwed over and you're down 80%. Because I see some people that were down 80% and they might have just raged quit. Just closed their laptop and just walked away. And I mean, that's just not the right thing to do because during those times, especially if you have options, you need to do things because they're decaying every single day. But, I guess you could always rage quit, just put all the money into ETFs and then walk away for sure. That might work actually. But nevertheless, I see some people that are struggling right now, and I feel for you guys. I respect all you guys, and hopefully we have mutual feelings for each other. But anyways, so hopefully, just see it as this is: if you have a conviction for a stock, then if it dips, you should cut all your other BS positions, as I always like to say. And then put that money into the high conviction ones. And if you don't have anything that's high conviction, what are you doing, man? Maybe you should do some more due diligence and fundamental analysis first and then find some conviction for the plays and then get into them. Maybe that's the issue. I'm not sure. But that's what I did. So if you guys were following along on this journey during this dip time, which we're almost out of now, it seems like, then you will probably have known that I have done that. And but I do appreciate everybody sticking around. I definitely see the light at the end of the tunnel, and I don't know if you guys do, but I do. I feel like it. I always see people fantasizing about dip buying, but then when the dip comes, they just get scared and panic sell and just question yourself. But I really do think that for myself and for most of you guys, you stayed calm, dollar cost averaged, cut your smaller, more volatile positions, and I really do believe that. And that's how you're gonna come out ahead. That's what's gonna separate the day traders or the swing traders or whatever type of trader investors you are that make money and the ones that don't. I really do think that is how you handle these down times. It's easy to trade when everything is going up, but those times in that everything is going down in our portfolios, and we came out on the other side ahead of what we were and set ourselves up for even greener pastures in the future in the next couple of months during the dips. I think that is huge success right there. And I think it's a lot of the times overlooked and people don't appreciate that as much. But hey, it is what it is. Nevertheless, guys, smash that like button if you like this type of video. I kind of just did a little fireside chat for the last 2 days. I don't really have anything on the watch list so much, and I'm actually changing the watch list, and that's why and I've been thinking about this for a week or two now. The watch list is a little bit dated and it's hard updated, and some of those are from last January, February, I assume. And even though my target is still the same, I should change the time frame, and the risk could be different now. I mean, it's just a mess, I think. So I'm going to change it up, and I'll probably do like a weekly, the watch list for the week, updated every Sunday, something like that at least. That's the plan. So let me know what you think about that, guys. Smash that like button. Subscribe to my Twitter, YouTube. We will link in the description. They do give away 2 free stocks right now. Spin the wheel. Maybe you can get Google or Facebook. I don't know. I didn't, but I saw some people that did. And I do the one-on-one session. So if anybody is interested, hit me up. That's pretty much the only thing I get out of this. Even though my YouTube is finally monetized. I think I make like $1 per video. Anyways, guys, see you on the other side. Peace.